Welcome to Bullets, Pickler Wealth Advice monthly market update. For each month, I will break down the major political and economic activities happening in our world. No frills, no jargon, just the facts. This month, we focus on Women's History Month. And we're going to begin with an amazing quote from the legendary Hall of Fame tennis player, Billie Jean King. Billie Jean once said, "The more you know about history, the more you know about yourself, and most important, you know what can shape the future." This month's trivia, we're going to focus in on honoring our First Ladies. March is, as I said, Women's History Month. Did you know that our second U.S. President, John Adams, while he was writing the Declaration of Independence in 1776, his wife, Abigail, urged him to, quote, remember the ladies. Nearly 150 years before the 19th Amendment gave women the right to vote, her letter was the first private step in the fight for women's rights. Each month during our Bullets presentation, we're going to begin by looking back at what happened in the previous month. As we came into the year 2024 as a market, one of the greatest fears, one of the greatest concerns that we had in this market was a concern about inflation and whether we would see a reigniting of those inflationary pressures that were driving prices astronomically high. As we were going through this fear, we've also begun hearing from market historians, people who have been drawing parallels between what's going on today and what happened back in the 1970s. They've been stoking fears that we might see a recurrence of some of the same issues that arose during that very difficult time period. You see, back in the 1970s, we saw a combination of failed government policies. We saw a situation where we had a global energy disruption. And we also saw a situation whereby we had an irresponsible and inconsistent Fed led by Fed Chairman Arthur Burns. The result of all this was a period of stagnant economic growth and runaway inflation. In fact, we coined a brand new term, stagflation. As a result of these fears, then we've seen a heightened sense of sensitivity to the market reports on inflation. Each month, we get 3 different reports on inflation: the PPI, or Producer Price Index, the PCE, or Personal Consumption Expenditures, and the CPI, the Consumer Price Index. Each of these measures a little different way of looking at inflation. During the month of February, with each of these 3 inflation indexes as they were announced, we saw a degree of anxiety by the market in the time leading up to the announcement, and certainly a market reaction. Overall, while the numbers were a little higher than expected, it still reflected an overall continuation of the downward trend in inflation rates. This is very, very important for us. And as a result, the market reaction was relatively subdued, and we were able to continue the rally. In fact, the rally reached record heights in the month of February, as we saw the Dow Jones Industrial Average reach over 39,000. And for the very first time ever, we saw the Standard & Poor's 500 index reach over 5,000. These are very important milestones and certainly a continuation of a very positive market trend that we've been seeing. We also saw in the month of February where the stocks who were really leading this whole 4th industrial revolution of artificial intelligence continued to move forward, especially led by NVIDIA, which once again reported blockbuster earnings as they continue their exponential growth. And certainly we saw an overall trend of higher corporate earnings, can again continue to propel what was a very, very powerful rally that began last fall. Moving forward into March, I believe that there's a lot of reasons to be confident. Economic conditions continue to normalize as we continue to move away from the period of the COVID-induced disruptions in the market. We're seeing things like supply chains continuing to improve. The shortages are certainly continuing to abate. And as we've said, inflation continues on that downward spiral, in the downward progression. Our economy remains absolutely robust. It has been driven by a very resilient and very strong American consumer that's really continuing to fuel the rally. As we go forward and move into the next period, I believe that we'll have a market that will continue to be driven by three major factors. The first is going to be higher corporate earnings. That continues to be robust. I also think we'll continue to see lower inflation and certainly a more accommodative Federal Reserve Board that I believe will begin the process of cutting short-term interest rates in the next few months. Since we are honoring our First Ladies, then I think it's appropriate for us to end with a presidential tagline, a presidential quote. And this came from one of the greatest First Ladies of all time, Eleanor Roosevelt, who said, "The future belongs to those who believe in the beauty of their dreams." Thanks again for joining us for another edition of Bullets. It's our family delivering solutions for your family. This is our purpose. This is our passion. Together we plan. Thanks for joining us. Until next time, I am David Pickler, and these are our Market Bullets.